those reimbursed expenses at work or fees you pay your tax preparer, you may be a little disappointed this year when you file your taxes, and that's because the Tax Cuts and Jobs Act, the new tax legislation that went into effect last year, it curbed itemized deductions, and that is just one of the effects we are seeing so far. And this morning, Daniel Friedman, CEO of WMGNA, joins us live in studio with more on those changes. Good morning.
Good morning.
First, just tell folks what your firm is about and what you guys do.
Well, we've been providing all-inclusive wealth management services to folks here in Connecticut since 1995, and we have an office in Delray Beach, which would be a far better interview, I think, this morning.
And let's just get into it. What is the act about? I understand it went into effect this year. For those who don't understand what we're talking about this morning.
Well, it's a very far-ranging change to everyone's taxes. Here in Connecticut, you're going to see a limit on your property taxes. There's changes to mortgage interest deductibility, home equity loan deductibility. Personal exemptions are gone, so there's a plethora of changes that are made. There are some changes that will be effective for 2019 tax year that aren't kicking in for 2018. But while people are doing 2018, there's going to be a big difference just in the tax form itself from 2017.
Monetarily, what does that look like? Does that mean we may get less money when we file our taxes with our tax returns? What does that look like for the average person?
Well, the folks that we're working with now, what ended up happening is the withholding rates from your paycheck were changed, and they haven't necessarily matched up to what your tax bill may be. So it's not like you're owing more because of it, but you may have had less withheld, more in your paycheck, and now have to come up with additional money, or if you were counting on a refund, it may not be as significant.
Okay, so for folks who've already filed, not sure if this might help them, but for those who haven't filed just yet, myself included, how do we minimize that liability?
Well, obviously the tax planning needs to be done during the actual tax year. So there are a couple things that you can do. If you're able to make an IRA contribution, you have until April 15th to deduct it from your 2018 tax return. If you have a high deductible healthcare plan, you can make your HSA contribution by April 15th. Those are the two main things that you can do to minimize your taxes.
Overall, with the folks that you guys are working with, have you guys been seeing lower tax returns this season compared to maybe previous years?
Again, it really depends. There's a bunch of things. The standard deduction now, so for folks that maybe had their mortgage paid off, their property taxes weren't very high, their income taxes weren't very high. They may have itemized in the past, but now you get a $24,000 standard deduction for a married couple. If you're over 65, it's a little more. So we're seeing on that end some of the, we call them restyled folks, benefiting from it. People that have got high mortgage interest, high property taxes, and again around here it doesn't have to be very much, and who pay a significant amount of Connecticut income taxes, they're seeing those reduced, but the rates went down. The alternative minimum tax has been more friendly, so it's just a big hodgepodge in many cases. It's hard to be general.
A big hodgepodge. Mr. Friedman, thank you so much for joining us this morning. Hopefully folks can, maneuver around that hodgepodge as you just described it here. And again, your firm, you guys are located in Farmington, I believe?
In Farmington, yes.
All right, and you can go ahead and check them out. You guys have a website as well.
WMGNA.com.
All right, thank you so much. Right now it is